What do you do when there's a sudden, unexpected, and sharp rise in business activity and regulatory demands? Today, we're going to talk to two consummate professionals, Josh Weinberg of First Line Compliance and Lonzo Sheffield of Cross Country Mortgage. And we're going to talk to them about how they deal with these types of issues. This is the Mortgage Banking live stream. Hello, this is the welcome. This is the Mortgage Banking live stream. I'm Troy at Garris Horn. Today is August 5th, 2020, and we're going to have a great show today. We are here to educate, to connect you to information and people, and to entertain. And today we're going to talk about some very detailed questions that people have, especially in recent times, but it happens all the time when there are sudden changes in business activities, especially when there's a big, sharp rise. Couple shouts out as we get started. The Colorado Mortgage Lenders Association tomorrow is having its annual conference. If you're not signed up yet, it's a fantastic organization. They got some great speakers lined up. Take a look at that. Texas Mortgage Bankers Association, they have, as many people know, they've moved their mortgage symposium and reverse mortgage day to November. That's going to be virtual. We were talking about that yesterday, and that is moving forward with in full gear. And just one quick moment before we start that I wanted to mention. As people know, I'm a big fan of the National MBA, and our organization and also First Line Compliance, in which I have an interest, is a big fan of MBA's Opens Doors Foundation. And I just want to take a moment because to mention this, because we support Opens Doors. Long have supported Opens Doors. It's a great organization, especially in this pandemic that has occurred. It's helping a lot of people. Well, AmeriHome Mortgage gave $100,000 to Opens Doors Foundation, and just it's just a moment in time where people can help take care of each other, and this is a fantastic thing that AmeriHome is doing. I just want to point that out. I think we get too little credit for the things that we do in this industry. So congratulations to Opens Doors, and thank you, AmeriHome. Pam Jenkins, Home Vantage, thanks for the comment. I will get you that information. Rhiannon Bullen, MCT, fantastic person. Thank you very much. Greg Reynolds at Finance of America, thanks for the support. Let's talk just briefly about business. Business in our industry remains strong. It's cyclical. There are ups and downs, but it generally remains strong. I will point out, though, there's some signs that it's evolving a little bit. MBA reports that mortgage apps are down slightly. They were down a little bit last week. This week, they're down 5.1%. That's not necessarily a huge drop. We've had record volumes, so some evolution of this industry is actually healthy in this regard, but just to show that it's not always up, and nobody ever should be telling you that it's always up, because it is not. But anyway, if you need that information, it's on the MBA website, but you can also contact me and I can shoot that information over to you. Forbearances are down again, so they continue 7th straight week that forbearances are down. Although we heard yesterday that despite forbearances being down, there are some very strange phenomenon going on in that arena. A lot of the loans, we're told, that are in forbearance, people are actually still paying. And it was previously somewhere near 50% was the reported number that loans were in forbearance, but yet the homeowners were still making payments. That number of people, that percentage of people that are making payments, is actually decreasing. And so that is also evolving, and nobody quite knows where that's going to go. But it is some suggestion that evolution is on the horizon, and we need to keep attuned to that. Companies need to keep attuned to that, because nobody knows where this pandemic is going, and schools are trying to start back up. Lots of things happening, but whatever is going on, nobody can forecast it, and we got to stay tuned. Multiple offers on properties, those are also up. This is from the NAHB, another fantastic organization, by the way. If you're not involved at NAHB, you should be. But they report that affordable housing continues to be a problem, and the part of the problem is driven by rapid increase in prices, and part of that is driven by lack of inventory, and part of that couples with the multiple offers on the single property. That's both in the pending or in the resale market and also the new homes market. Again, it's just an area that we need to watch. There's a lot going on and a lot that's unknown. A couple other shouts out. Heather Sanchez, now at Magnolia Bank. Heather, thank you very much for that comment. Chad Gamal at Arch MI. Chad's a fantastic person. Paul Marsh at Encompass Lending, thank you. And just before we start, then we're going to bring our gentlemen in, our speakers in. OCC's True Lender Rule, the Notice of Proposed Rulemaking, the deadline there is September 3rd. So put that on your calendar, and don't wait till the last minute, because it's a complicated issue and you got to think through some issues. But if you want your voice heard, this is the time and the way to do it. OCC has proposed a True Lender Rule, and there are a lot of facets to that, and it affects a lot of different organizations, not just depository institutions. And there are consumer advocates that we can expect to be commenting. They're already making statements about it out there, and you'll need to get your voice heard. This is the way democracy works. If you don't speak up, you don't get heard. If you do speak up, you do get heard. Now's your chance on this True Lender Rule. Today, what do? There's a sudden, unexpected, sharp spike in business activity and regulatory demands. There is unexpectedly low rates. Happens almost overnight with a huge spike in loan applications. I remember we've been saying for years, we've been in the industry, you've been hearing that rates are destined to go up. Well, they continue to be very low, historically low, and so they dropped recently in connection with the pandemic and all the actions that the federal government has taken there. Rates have gone down, and there's been this refinance boom. So what happens there? Plus the forbearance requests come flowing in unprecedented volumes. You got demands by regulators that you take care of consumers, both in the loan application process, the origination process, and also in the servicing process. It's especially with regards to forbearances and similar types of activities. And then the regulators also want information. They want reporting on what you are doing, how you're keeping up. How can compliance companies and compliance departments rather, and companies, mortgage companies, keep up with all this activity? Today we're going to talk to Josh Weinberg of First Sign Compliance. He's president over there, and Lonzo Sheffield of Cross Country Mortgage from the compliance department. We're going to find out what these gentlemen see and what they do. And gentlemen, I'll let you introduce yourselves, but welcome to the show and thank you for participating. And let's get this conversation started.
Excellent. Thank you.
Thanks for having us, Troy. Lonzo, you start.
Yeah. So Lonzo, as Troy just basically introduced, and really glad to really connect. And the heart, really, I actually reached out to Troy, and he made a comment. If you guys watch his show on August 3rd, with the shout out, but I actually asked the question, and he does read the comments. So I want to let you guys know that.
I read all of them.
If you do,
I respond
if
to all
you
of
do
them.
email or call, he actually does respond to them. Actually, himself does. So, and I happen, not that you'd be on the show or anything like that. I'm not saying that right now. But I am saying leave feedback, especially today. I think the topic with the rapid growth that we're having and increased applications. How do you effectively, communicate to the branch managers, and how do you get with the operations department? There's a lot of overlap. So how is we are proactive versus reactive? That kind of, and want to really start a conversation on that.
And I think that's a great point, Lonzo, because the proactive versus reactive is really important. How do people do that when it happens almost overnight?
Right.
And Josh, feel free to jump in.
Yeah.
Yeah, let me just kind of start by saying thanks, Troy, for having me again. And Lonzo, it's such a pleasure to do one of these presentations with you.
I know, right?
So I think in truth, part of the answer to that question is Lonzo. So it's forethought. How do we deal with the unexpected? We've planned for it. So Lonzo and I have a history of working together, and super happy to see his growth and his evolution into taking on a management role at a major lender across the country. It's having the right people, building them, trusting in them, giving them the tools and the resources to grow. I think the first thing that most of us did in the lending side when we saw these huge shifts, we tapped our people harder. We didn't hire, we didn't outsource, we expected more from our teams. And we expected more during the time of chaos, when they're working from home, when there is more unknown than known. And those are really trying and challenging times. So I think the first answer to how do you deal with what you don't know, you have to plan for it before the unknown happens. Trying to put a plan in motion or changing the tires while the car is moving at 100 miles an hour can often make for a messy process.
That creates, I think, a lot of regulatory risk as well, right? Because regulators expect that you can just deal with it.
Yeah, no, absolutely. And to that, just echoing what really Josh said, I appreciate the evolution. A lot of I specifically learned from him for sure. In looking at planning and reporting, and there's different tools that each company may use, but being able, I would say first and foremost, things that we've seen effective is just communicating directly with whoever is the main point of contact, because you can have a branch manager, you can have an ops manager, you can have even a VP of lending who may be over several different branches, but we all know there's that go-to person who will be able to communicate very quickly and efficiently and get things done. And so how to identify really that person in the other department and be able to communicate, here are some of the things that we've been seeing and monitoring. Not that we're trying to monitor because we're trying to catch you doing something wrong. And I think that's the other approach in compliance we would want to have, is we're not trying to be the gotcha police, but really we're all in this together. And so how do we, monitor and track and report effectively, quickly, efficiently, and pivot and make the proper changes, unless we have the right tools and the right people actually get it done. So just definitely echoing what Josh said for sure.
Absolutely. I agree with that too. I mean, the days of sales versus compliance being apart and separate need to end. We are partners. We work together. If the sales team trusts compliance to help them build a better process, and compliance trusts the sales team to do the right thing, we have a much more cohesive and well-functioning team. I love the metaphor. Another coworker of both Lonzo and I is Jared Ryan used to say, compliance is not here to say gotcha. We're here to say gotcha. We want to soften the impact. We want to work with our sales and production teams to be able to provide a cohesive, a consistent process. One of the things that we've done, and that I think is a really heavy focus, is set the guardrails, throw in the bumper lanes for the bowling alleys. As compliance officers, what can we do to simplify the process for our sales team to follow? I think really, by and large, the majority of people in industry want to do the right thing and do it the right way. I think they're trying to do it the right way. And the foot fault or technical violation is often caused by unknowing or unintention. So on the compliance officer side, what can we do to avoid those foot faults, to avoid the gutter balls by putting in the right structure? And I think that's both human and policy and procedure level type requirements. And it also takes a huge element of technology. I think one of the things that's been a dividing line right now for lenders in this environment, those who've been able to maybe better or more adequately adjust to the huge swells in volumes, are those that have been able to leverage technology. Troy, to your point, we've been saying for a while, rates are eventually going to go up. I still think rates will eventually go up. Quoting folks like Rob Chrisman and what he's reading in the tea leaves from the Federal Reserve saying, look, prime rate may not go up until 2022. So eventually it still will go up, and whether that's next year or the year following that we see a shift in rates, we do need to be prepared for that. And one of the philosophies I've always followed is leveraging technology, because I feel it's far more humane to scale a technology than it is to get rid of good people during times of crisis or when volume starts to shrink. So what have we done in the past? What are we doing now to invest in technology and the right technology to build those efficiencies and scale? And one last piece, I don't want to take the whole time. I think more than anything, now is a time where compliance needs to prove out as a competitive advantage. I think the C-suite and the folks that control the purse strings of making purchase decisions or investment or resource allocations remember the end of 18 and beginning of 19 margin compression very acutely. But the muscle memory associated to the 8 years of compliance impact before that has gotten pretty short. So what can we do from the compliance side to show ROI from compliance investment, or at the least the ability to limit excess liabilities or additional liabilities? And again, by leveraging technology, I think that's a good way of achieving that balance. And again, being more humane to the staffing needs as that volume eventually ebbs.
Yeah, I think of that point. It's a great point, Josh, and I make this a lot, and I know you do as well. And there are lots of people that talk about this, but I think of it as, instead of competing on compliance, it's competing with compliance, and that preposition where people, and I see this quite frequently, people are talking about. Can we cut corners here? Can we cut corners there? Some people down the street are doing this, and they're getting ahead of us because they're competing on compliance, and that's really not the way to go. If you build a system that works with compliance and works, and competes with compliant functions in place, you build a system that runs like a well-tuned engine, and it's a great point, I think.
Yeah, definitely an advocate of leveraging technology as well, and using, because I mean, systems, one of those things. I mean, in general, systems don't fail. I mean, they run consistently every single time. Yes, we got to monitor just in case, say, a disclosure doesn't go out in a particular state, or we do our monitoring side just to make sure we have our alerts and messages for those instances where one of the main technology providers, they go down for a little bit. I mean, that does happen. But in general, I mean, systems, putting those in place, leveraging technology, they work on a consistent basis, 24 hours a day. And the fact is, us as humans, we have our willpower is a finite resource. So we can only work, 12, 14, 15-hour days for so long until we need a vacation. So leveraging technology, I agree 100% in doing that, in playing ahead. And one other things that I'll just share is, besides leveraging technology, once we've automated basically the guardrails of catching the department as growth does happen, it's just one of the things that we're kind of thinking of is, how do we better service the additional volume and additional branches and just all the additions that come with that once we've leveraged technology as best as possible. And so that's kind of where we're at in the planning phase of playing ahead of how is it that we can effectively better service and better come alongside as we grow, and just trying to minimize the growing pains as best as possible, whatever that even looks like. So curious thoughts on that for sure.
Yeah, Josh, any thoughts there?
I think it's a point well taken and well made, Lonzo. I think we have to rely on or reference a couple areas. So one piece I want to put out there, one, because it's self-interested, because of first line compliance. So just to throw out my bias, now is the time to ask for help when you need it. Don't be ashamed or afraid to ask for help. The compliance officer that says they know it all is lying. There is so much out there that is highly specific and highly nuanced. It really takes a village these days. So when the opportunity arises, when there's a need to get extra help, ask for it. There's no reason not to. I think many institutions are considering outsourcing or partial outsourcing in many areas, that whether it's compliance directly, whether it's audits, whether it's assistance in licensing. I think another area that really is related to compliance but sometimes separate is quality control and QC. Our QC departments are drowning. The impact of the volume increase from March and April is just now hitting our QC teams. There's that 90-day lag. So the increased volume we saw in May, June, and July are going to continue those demands and pressures on our QC team. So did we start planning for that in March when we saw the increase in volume, or did we not start planning for that until that volume hit our QC teams? If you waited, there's no way to build the internal team to fix it. You need to rely on someone who's got that expertise and resources to work with and rely on. I'll also just say, I think another important task or an area that's really helpful, I refer to as compliance triage. Back to my point, one, no compliance officer knows it all, and two, no compliance officer can get everything done that's on their plate in a single day right now. So issue spotting and knowing which are the most critical tasks to work on first is a really important piece of understanding or managing the risk environment for the lender.
Mm-hmm. Yeah, that's good. And really just echoing that risk, talking about that, what's the risk appetite is, if I want to use that correct term, because each lender is different in regards to what they're willing to actually do from a compliance standpoint, whether a 1 or a strong 2. I know we've had discussion about that, Josh. What is the risk appetite in regards to doing that, but also level of increased sales as well, and appeasing that process. And not necessarily appeasing is probably not the right word, but working with that process as well, because we don't want necessarily too much compliance where the sales volume goes down, but at the same time, we want to be the guardrails, as you mentioned. So I definitely agree with that. Risk appetite.
Yeah, I really think that's right. We can be the most compliant lender in the world, be perfectly compliant, and do no business.
Right.
Or we could be totally business focused and be out of business because we have no compliance. So it's that sweet spot, that balance between production and compliance, sales and compliance, working together to have the right pieces on board.
Yeah, and what I see, especially in the merger acquisition activity, is if you want to grow a company that is, going to be a company that is a good target for selling it in the future, you really got to focus on the compliance piece as well as the business, because I've gone into many companies over the years, and deals have failed after getting pretty far down the road simply because there were issues with compliance or legal functions that just weren't used properly, and companies that didn't really grow with compliance in place, and those can be painful because the people who thought they were going to be able to sell their babies that they had grown, turns out they had a difficult time doing that, and they spent a lot of money working on deals that just never consummated. So that definitely can be a problem. How do you guys keep up with all of the sudden changes in the rules and the regs that apply to you? Because there's been lots of changes just recently.
I'll jump first on that one, guys, if that's okay, Alonso.
Go for it.
To me, the first thing I've been leveraging is trust my teams. Knowing that I've got a person or a department responsible for doing change management. Are we even monitoring? Are we even aware of the changes that are occurring? I think that's the first piece. So first, have we identified it? Second, have we done something to interpret or understand what our policy's reaction to it? 3, do we have an implementation plan? That implementation plan probably has to include a policy or procedure, training, rollout, and then do we have a review function? So, some of the things that have come up around state reporting, Washington, D.C. or New York or others who have come up with, or even VA who have come up with monthly or quarterly reporting for different defects or forbearance reports. Again, knowing that those requirements or obligations exist, and then being able to keep up with and respond to them does take a resource. And so if that resource isn't already identified in your organization, identify it now, and then rely on them and give them the support and resources to be able to do their job effectively. If you don't have that team or department or person, this is an area you certainly need to reach out for help on. Not paying attention or not following the reporting obligations is likely to lead people to having their licenses revoked or significant enforcement action, which, even if not today, tomorrow and in the future are going to cause significant issues for a lender that's not keeping up with the requirements.
And that's spot on. I would just only echo, being in the trenches, I have some simple things I do is subscribe to updates. I mean, it's some of the, just being someone who's like in the trenches doing it, making sure I'm reading those email updates that I get from VA and from the CFPB, and also some things I like to do as well, like create different calendar events on my calendar, block off time to where specifically doing future thinking of research for policies and procedures of what can be done, and blocking off time for that. I mean, that's I mean, it's more a matter of, trust the team. It's like, okay, are they allocating that time capacity to do just that?
Yeah, I'll tell you, I have a friend, a great, previously she was a compliance officer. She went to law school. Now she's a lawyer. And Valerie Headland is her name, and she's here in Texas. And she has a schedule that always intrigued me. She would get up at 4, 5 a.m. Before the kids woke up, before things started getting going, and she would spend an hour, 2 hours reading rules, reading developments, because she knew that this was when I was talking to her about this particular schedule. It was right around 2014 when all the new CFPB rules were coming into play, and she was just trying to keep up. There was so much going on, but she really set aside time. And every person, to your point, every person has to figure that schedule out themselves and do it differently. But that was her approach, and you do need just a block of time, whatever it is, 30 minutes, an hour, whatever, where you can just focus and try to think through the issues without all the distractions and chaos of what's going on. It's hard to find
emails.
That's right.
The emails, the phone calls.
That's right.
It's like, I think, thinking time is undervalued.
That's right.
So, because sometimes you really do got to take a step back if you actually want to create and implement a process that's going to work and that's going to last. That's not going to have too many pivots.
Yeah, very true, very true. And thinking is undervalued, I believe, deeply in that.
Totally agree. I think, often our nose can get so close to the grindstone, we lose the perspective of what's beyond in front of our face.
Yeah, for sure. For sure. Well, guys, I'm taking a ton of your time. Any thoughts or last comments that actually ending on deep thinking is a good way to approach this. It's probably not a bad way to end this, but any last comments before we take off?
I'll just say, in addition to deep thinking, as you share, Troy, deep work, not to plug a book, right?
Right.
Deep thinking, deep work,
Yep.
And as well, for sure, whoever is watching this, in the comments, if you have any questions on it, or you have any best practices that you use, for sure, this is it's a community. So we all of us are better than none of us. So let's all grow and improve.
That's right. Excellent words.
Yeah, I think that's spot on, Lonzo. And I'll use these kind of parting seconds just to throw out another plug. I would encourage everyone to think to the future. Think to bringing new people, younger people, more diverse communities into our industry. I've heard from a friend, you don't grow up as a child thinking, hey, I'm going to be a compliance officer. Why not? These are great people. Some of the best people I've met in the industry are fellow compliance people and leaders in this space. Genuinely kind and good-spirited. And we now, as leaders in this industry and in this space, have an obligation to pay it forward. I encourage everyone to look at organizations like NAMBA, the National Association of Minority Mortgage Bankers. Tony Thompson is doing an amazing job there, and they are working on bringing people who have just graduated from college into our industry. This is the lifeblood that we need to be able to sustain and move into the future. I'm really proud to be what NAMBA has called a NAMBA visionary and a visionary ambassador. Really encourage you guys to check out their website. Reach out to me personally. I'd love to talk to you about this. This is a personal issue for me, and one that I think professionally as an industry we can do better and need to do better. And if we do better, we as an industry will be better.
Yeah, and I'll tell you, another point there is that until I became a lawyer, I didn't know there was such a thing as compliance officers, really. But people should know that these roles exist, and that they're really good, well-paid jobs. And like Josh said, it's some fascinating and great, solid, sound people that are doing this work. And people should definitely educate the young.
Absolutely. Troy, thanks again for having me. A pleasure. Alonzo, such a great time.
Yeah.
Again, look forward to catching up.
Yeah,
absolutely.
Both you gentlemen. Yep. Have a fantastic rest of the week. We'll talk again soon.
Take care.
Take care.
Take care.
Bye now.